Hi, my name is Rachel, and today I'm going to show you how to fill out Form 1040. In this video, we will begin to learn how to fill out Form 1040 and go until line 9. In the videos that follow this one, we will continue to fill out Form 1040 until its completion. We're going to start at the top of the tax return, which is filing status. There are 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse. A taxpayer's filing status is single if, on the last day of the year, the taxpayer is unmarried or legally separated from their spouse, or if they do not qualify for any other filing status. For the married filing statuses, an individual is considered married if they are married and living together with their spouse, or they are living together in a common law marriage, or they are living apart but not legally separated under a decree of divorce, or they are considered separated due to the fact that their divorce decree is not finalized. Next is head of household. A taxpayer can be head of household if the taxpayer is unmarried or is considered unmarried by year end and they paid more than half of the expenses for maintaining a household, or they provided more than 50% support for a qualifying child or qualifying relative, and who, except for a parent, lived with a taxpayer for more than half the year. The last status is qualifying surviving spouse with a dependent child. This filing status allows one to retain the benefits of the married filing joint status for 2 years after their spouse's death. To qualify, the taxpayer must have a dependent child, and in the year of death, the surviving taxpayer can then use married filing jointly as the filing status for that year, if the surviving spouse would have otherwise qualified for that status. In this video, we will be looking at an example of the taxpayer, Emily Green. She is a 39-year-old 5th grade teacher who was considered unmarried by year end. She has 2 children who lived with her for the entire tax year and paid more than half of the expenses for maintaining a household. Based on this information here, take a moment to think about which filing status to use for Emily. If you thought that we should use head of household, you are correct. So we're going to check off that filing status and continue along. The next parts are just entering her name, putting in her first, last name, and home address. After filling in her information, we get up to a question asking, at any time during 2023, did you A, receive as a reward, award, or payment for property or services, or B, sell, exchange, gift, or otherwise dispose of a digital asset, or a financial interest in a digital asset? This is a newer question. It was added in 2020 when the IRS decided that virtual currency is considered investment property and must be accounted for on the tax return, just like any other sale or investment. But with the given information, Emily Green did not, so we're just going to check off no. The next part is filling in her dependent information. So looking at her information, we see her children are 7 years old and 14 years old, so they qualify for the child tax credit. If you don't know who qualifies, that's okay, because the tax credit is going to be discussed later in the tax credits video. Now we can get started with the actual line items. So on line 1, wages, salaries, and tips are entered. Looking at Emily's W-2, Emily has W-2 income of $36,500 on line 1 of her W-2. She does not have any household employment income. So the amount on her W-2 is what we are going to enter here on line 1 of Form 1040. Reviewing from our reading assignment, some other items that would be entered here is tip income not reported on line 1A, Medicare waiver payments not reported on Form W-2, or taxable dependent care benefits from Form 2441. Now we are going to move on to line 2A and 2B, which is tax-exempt interest and taxable interest. To review, on line 2A, tax-exempt interest is reported. Some examples of tax-exempt interest include municipal bond interest or interest from individual retirement arrangements. Taxable interest includes interest earned from bank and credit union accounts, savings or other bank deposits, interest paid on money lent to another individual, interest earned on U.S. savings bonds, or interest received on tax refunds. Remember that regardless of the dollar amount and regardless of whether or not the taxpayer receives a 1099 INT disclosing the interest must always be reported in the year received on line 2B of Form 1040. From the information provided, we see Emily has $3,480 of interest earned from a savings account with the People's Bank. And so that's going to be entered here on line 2B. Because she received more than $1,500 in taxable interest income, she has to attach Schedule B. So if we go to Schedule B, on line 1 of Schedule B, the amounts of taxable interest income are entered. On line 2, the amounts on line 1 are added up. Line 3 asks if the taxpayer cashed Series EE or I U.S. savings bonds issued after 1989 and paid qualified higher education expenses for themselves, their spouse, or their dependents. If they did do this, they may be able to exclude part or all of the interest on those bonds. So Emily Green did not do that, so the amounts on this line is just going to be 0. The last line asks to subtract line 3 from line 2. So the amount of $3,480 on line 4 is then entered on line 2B of Form 1040, and Schedule B is attached. Next is line 3A. So on line 3A, ordinary and qualified dividends are entered. The most common dividends are distributions of profit that a corporation pays to its shareholders. Ordinary dividends are corporate distributions in the form of cash. So if we go back to Schedule B, we can find that the next section on Schedule B is for reporting ordinary dividends. So Emily receives a Form 1099 DIV from Farmers First INC showing that she received $1,700 of ordinary dividends. So this amount is reported on line 5 of Schedule B. And then on line 6, it's the total that was reported on line 5. And if it's over $1,500, you must complete Part 3. So Emily has to complete Part 3 because her amount's over $1,700. And once this is done, she can enter the amount of $1,700 onto line 3B of her Form 1040. So moving on to the next line where IRA taxable distributions are entered. Whether a distribution is taxable or not taxable depends on the type of IRA, the age of the account owner, and the use of the proceeds. So, for example, distributions from a traditional IRA are fully taxable. Emily does not have any distributions from an IRA, so we're going to go on to line 6. On line 6, Social Security benefits are entered. Social Security benefits include monthly retirement, survivor, and disability benefits. Emily, again, does not have any Social Security benefits, so we're going to go into line 7, which is for capital gains and losses. If the taxpayer sold a capital asset such as a stock or bond, they have to then complete and attach Schedule D, capital gains and losses. Emily did sell a capital asset during the tax year. She sold some stocks that she purchased 3 years ago. So she had purchased 100 shares YYZ stock for $2,000, and she sold 50 shares on July 10th during the tax year for a total of $5,500 after her selling expenses were deducted. So many transactions will require that IRS Form 8949 is completed before lines 1, 2, 3, 8, 9, or 10 of Schedule D is completed. Whenever an individual sells a capital asset held for personal use at a gain, they need to calculate how much money they gained and report it on Schedule D. And depending on their situation, also Form 8949. IRS Form 8949 is used to report the sale or exchange of a capital asset not reported on another form or schedule, gains from involuntary conversions, other than from theft or casualty, of capital assets not held for business or profit, or non-business bad debts. Schedule D is used to report the overall gain or loss from transactions reported on IRS Form 8949 or capital gain distributions not reported directly on line 7 of Form 1040. An individual does not have to file IRS Form 8949 or Schedule D if both of the following apply. There are no capital losses, and the only capital gains are capital gain distributions from Form 1099 DIV Box 2A, or none of the Form 1099 DIV have an amount in Box 2B, Box 2C, or Box 2D. So Emily will need to complete Form 8949 before she's able to complete Schedule D. So we have our Form 8949 here, and we see she sold 50 shares of the portion that was bought for $1,000. So she made a profit of $5,500. So her net profit was $4,500. Going to Schedule D, we can see again that the $5,500 was entered for the sale price, $1,000 was entered for the cost of the stocks, then $1,000 was subtracted from the $5,500, giving us a total of $4,500. So the final amount of $4,500 is entered on line 7 of Form 1040. Okay, so moving right along to line 8, where other income from Schedule 1, line 9 is entered. Schedule 1 is used for additional income and adjustments to income. Before we get started, let's just quickly review what each line is for. So line 1 is used to report taxable refunds, credits, or offsets of state and local income taxes. Line 2 is used to report alimony for divorce agreements entered into before December 31st, 2018. So for divorce agreements entered into before this date, the alimony is taxable and has to be entered here. Line 3 is used to calculate business income or loss that is calculated using Schedule C. Line 4 is used to report other gains and losses if the taxpayer sold or exchanged assets used in the trade or business. Line 5 is used to report income from rental real estate, royalties, partnerships, S corporations, and trusts. The amount is derived from Schedule E, supplemental income and loss. Line 6 is used to report farm income or loss. This is derived from Schedule F, profit or loss from farming. Line 7 is used to report unemployment compensation. A taxpayer should receive a Form 1099-G showing in Box 1 the total unemployment compensation paid to them. Line 8 is used to report other income that's not reported elsewhere. Some other income is bankruptcy and cancellation of debt income, gambling, lottery and raffle winnings, or court awards and damages. Okay, so now since we reviewed using the information we have, we're going to fill out Schedule 1 for Emily. For the tax year, she received $9,000 in alimony payments, and her divorce agreement is dated September 9, 2017. So her alimony is taxable because her divorce decree was before December 31st, 2018. So $9,000 is entered on line 2. On Schedule 1, line 3, business income from Schedule C is added. So you'll learn how to fill out Schedule C in the small business unit of the course, but for right now, we'll just take the amount of business income and enter it here on line 9. She had no other business gains or losses to enter on line 4. She did have rental income, so we're going to need to fill out Schedule E. Before filling out Schedule E, though, let's look at the remaining lines. So she had no farm income, no unemployment income for the year, and no other income. So we'll go back to line 5 to fill out Schedule E, which is needed for line 5. So we have some info here that Emily rented out her home for 17 days during winter vacation for $60 a night, making her rent received at $1,020. She had $60 of cleaning expenses, she had $75 of repair expenses, and the utilities for the 17 days was $105. So her total rent expenses were $240. And after subtracting her expenses from rent received, the total amount comes out to $780. In addition to being used for rental expenses, Schedule E is also used to report royalty income. Royalties can be received from copyrights on literary, musical, or artistic works and similar property, or from patents or inventions. Royalty income can also be received from oil, gas, and mineral properties, and is the amount received when natural resources are extracted from a property. Royalties from copyrights, patents, oil, gas, and mineral properties are taxable as ordinary income. So Emily didn't have any royalty income, so we're just going to go back to Schedule 1 and fill in line 5. We can then add lines 1 through 9 of Schedule 1, and we get a total of $17,259. We enter that on line 10. So the amount from line 10 of Schedule 1 can then be entered on line 8 of Form 1040. So adding up, going back to 1040 and adding up lines 1, 2B, 3B, 4B, 5B, 6B, 7, and 8 of Form 1040, we get a total of $63,439 on line 9, which is her total income when we enter that on line 9. So now we filled up to line 9 of Form 1040. Thanks for watching, and stay tuned for the next video in which we'll go over the next line, line 10 of Form 1040, which is adjustments to gross income.